Get out your notebooks, get ready, because this first segment, we're just going to have a fireside chat with these two gentlemen to talk about what are the opportunities, the investment opportunities for 2020. And let's go into it. So, the first gentleman on stage, he comes into marketing almost every day. We're still trying to find out why, but we believe that he loves us and just wants to come and hang out and give us all the latest. Every time we come pricking brain, all right, Peter, what's next, what's next? So without further ado, ladies and gentlemen, please welcome Mr. Peter Thompson.
Hey.
Kiss on the mic, sorry. Do that again. All right, thanks, Peter. And Peter, next is Mr. Greig Lindo. Away from the mic. All right, I'm getting a signal off stage. Sorry, folks. It's a little distraction there, so let me sit up. Hi, guys.
Hey, Carrie.
What's happening? So, as I said before, right, I could have given you titles, but in English, that may not mean anything.
Yeah.
Am I too close? Peter, could you break it down and tell everybody what you do at JMMB?
All right, so let's do it the easy way, right? So JMMB is in the business of helping clients to achieve their goals. JMMB, in the past, what we used to do is you come in, give us X dollars, we give you a particular rate, and that rate should be a nice set rate designed to help you meet your goals. Over time, the model has transitioned a little bit, where once upon a time you could put $10,000 or $100,000 on what we used to call a repo, fixed deposit, and you'd be able to get 15, 20%. So nice and easy, no risk. You're just collecting all day. That world is over.
Done.
So if you want a repo now, a short-term repo, you're going to get 2%. That's before tax. So the role has been designed to say, okay, we are not giving up on our clients. We want to help clients to achieve their goals and want to help them navigate this new investment environment. So what my role came up around 7-8 years ago. And my role is to I oversee all the investment managers across the JMMB group. So it's Group Client Investment Manager. And that role is responsible for all of the portfolio managers, all of those advisors that you go and sit and talk to say, how are we going to achieve our goals? That whole conversation, the assets that they're going to choose. It is my job to ensure that the right assets are selected to help clients achieve their goals.
Correct. So you manage the client and investments on the client's behalf to maximize return to achieve their goals. Greig, quickly, what do you do?
Well, good afternoon, everyone. I don't think I have as much to say in terms of my role other than I am charged to make money for the company. So
making money is good.
We make money through the trading of bonds on a proprietary portfolio, FX.
What does proprietary mean?
Proprietary portfolio means JMMB's capital. So the money that JMMB has to manage on behalf of clients, and then you have JMMB's own money that they invest. So I am charged with the responsibility for the equities portfolio.
Stocks.
And I also play a role in bonds and FX as well. In the
foreign exchange. All right, all right. So I'm translating, right? I'm helping with the translation. So it's all good. Don't worry about it. It's when you do something every day, some things just come more naturally than others. So guys, so you see everybody have their notebook ready, right?
Yes.
So wipe the beads of sweat, because I know we've had this discussion. We had our pre-planning meeting, so I know you are ready to share. What do you think are, and again, this is just, we don't have no crystal ball, we know. So anything can happen in the world that we live in, right? You get up one morning, you hear about a war, and the next day there's no war, and to impeach or not to impeach. But the thing is, the reality is, from your expertise and what you've seen happening and so on, things are changing. From 2018 to now, things are changing. What we used to see happening in 2018, 2019, you don't necessarily see or predict is going to happen for 2020. So we'd like to know, drop it down for us, what are the opportunities for you see for clients to invest their funds in for 2020? We're ready for that.
So I think I'll start.
Yeah,
and before we get into the meat of the matter, we have to just take a look at what is our reality.
What is our reality?
What are we facing? So Peter just mentioned the returns on repos as very low. So just to give you a tangible example of that, if you have $1 million now and you come in to say, I want to buy a Bank of Jamaica certificate of deposit.
CD.
A CD, right? You will effectively earn on your $1 million, $800 in interest for the month.
$800 on a million.
That is before tax.
Before tax,
you're going to probably end up with about
tax.
$600, right?
Yeah.
That is just to tell you, this is what the money market is paying. If you look at global bonds, US dollar bonds, right? Government of Jamaica, US dollar bonds. If you invest in a 8-year security, you're roughly going to earn about 3.5% based on where bond prices are now. And this is if you hold the bond for the next 8 years, 3.5% per year.
Per year for 8 years.
Right? If you look at the equities market, which I'm sure everybody's excited about, right? So equities, the combined index returned over 30% last year. If you look at the last 4 years of performance of the equities market, the average return is about 33%. So there's a saying that capital goes to yield, right? So what is capital? Capital is the money you have in your pocket. That is your capital. That is your savings. That is the funds you have to invest. Capital will go where it makes the most return. So it's not surprising that equities has been the topic of discussion for the last year.
So because when we say capital goes, I mean, people will invest their money wherever they're going to get the greatest return. So when we talk about capital, we talk about the money that people have to invest. So if stock market is where the thing is and where the money is being made, people are going to put their money in the stock market. Yeah.
Correct. So this is the environment that we're in.
No, I want to throw that in the mix also. So once upon a time, also, you could buy foreign currency. You know, every John Brown was a foreign currency trader. You know, they get paid in Jamaican dollars, they convert it to US dollars, and just put it in a bank account. And as night followed day, the currency would devalue. So the Jamaican dollar once upon a time just went one way. It just devalued. Gone are those days. No, it is possible for people to lose money. Somebody is in this room actually converted their Jamaican dollars at probably 145. And that currency, the exchange rate is nowhere close to 145, but one of you somewhere in here did that, right? So betting against the Jamaican dollar as an investment strategy no longer works. So this is what we're seeing. We're seeing where interest rates are super low. The stock market is performing well, but with stocks, there come risks, right? So how you actually invest in the stock market, it's not you flip a coin and buy something, right? Because not all stocks are made equal. So within this global sphere now, so interest rates globally are low. So it's not only in Jamaica.
Right.
If you want a mortgage in Austria, you can get one at negative interest rate. How that work?
We don't know.
We're moving to Austria.
So I have 2 degrees in economics and a degree and a chartered analyst. And we were not prepared for an interest rate environment that's negative, meaning you're paying somebody to hold your money. So that is what negative interest rate means on a 30-year mortgage. So this is the reality that we're in right now. So how we actually make money in this environment, I think Kerry set me up, in terms of, okay, where is the money?
Where's the opportunity?
So the short answer is that it will take time and effort and a disciplined approach to making money in 2020. So last year, or over the last 2 years, in terms of buying a stock, the stock market performed quite well. And a number of people, how their investment strategy was, there's a new stock out, I'm going to buy it.
IPO.
They did an IPO, they just bought it. You know, flip of a coin, put X amount of money on it. Some people even borrow money and invest it. It worked out, right? Because stocks went up. Over the last, I would say, the last quarter of the year, we've seen where not all IPOs are created equal and is not one-way bet. So what we're saying in 2020 is that there are still opportunities in each of the asset classes, and asset classes, so equities, there are opportunities in equities or stocks. There are opportunities in bonds. And before I even say the opportunity, there may be an opportunity, or the opportunity may be different depending on who you are and your risk tolerance. Don't look on the guy over there who just make 30% on equities because you were not willing, your situation can't stomach the stock price a drop. So don't get bad mind and look on the guy thing and say, okay, he made 30%, I'm going to try and make 30%. Depending on where you are in your investment life cycle and how much money you have to invest and how much money you can risk, that will determine the opportunity that is suitable for you. Now, in general, as an investment manager, so my job for the next 3 weeks in January, I am tasked, I'll have to actually present a massive investment strategy that is then fed across the group to say, okay, this is how clients are going to make money. So Greig responsible for how JMMB is going to make money with its capital. My job is to say how clients are going to make money using their capital or our investment dollars. So what we're seeing, and Greig set it up in terms of the global spirit, what we're seeing now is local equities, we still believe, have some amount of, for want of a better word, juice left in it. But not all stocks are made equal. There are going to be stocks that you buy that may go down in value. So the approach that we're saying for 2020 is, unless you have the time, the effort, the dedication to actually put towards your craft, it is possible for you to lose money in equities. So investing in equities in 2020 in Jamaica is going to be normalized in that in order to make money, you have to spend time, do the research, look at the trading volumes and all of that. However, I am 99.9% sure that not everybody, that's not their job. You don't have the time and effort. There's kids to pick up from school, there's the next party to go to, and there's the boss, at your, door knocking, say, where are the results? So what we're saying, get help. If you don't have the time and effort, seek help in terms of crafting your portfolio to help you navigate this world. In looking at the strategy, because Kerry pointed it out a couple of weeks ago, and I had an entire strategy. But that strategy was based on before there was the possibility of World War III, right? So in my new strategy, we have to now be thinking about how are we going to, if there is a war, what should we be buying? Because yes, we're going to be concerned about our safety, but my job is actually to say, okay, in this thing, how we're going to make money? Yeah, it's sad but true, right? So in a war, what are the things that will happen? So we are looking at oil prices. We know that if there's a war in that part of the world, God in his infinite wisdom decided to put all of the oil in a part of the region that's volatile. So if there's a war, oil prices are going to go up. So how can we capitalize on that? As an investment manager for clients, how can we actually make money from the event if there's a war? If there's no war, that's a different strategy. So in the strategy that we put forward now, there's a little caveat that says it's subject to ceteris paribus as an economist, all being equal right now. So right now, we believe that there's opportunities in local equities, there's opportunities in international equities, in terms of buying quality stocks. You may not have the time to do the research to pick them, get help to help structure your portfolio.
Right. So I want Greig to expand on the opportunities part in local equities. Hold on to that. But Peter, just to go back what you're saying, because I think it's an important point that you made earlier, and I want to underscore it, is that everybody's investment strategy is different, right? So there's no cookie cutter sort of a strategy that everybody needs to be using, because my goals are not your goals.
Correct.
I don't necessarily, we don't share the same age. We do have the same tolerance for risk. my belly bottom going drop out if the stock price go south, right? For any period of time. There are some people who can stomach that. And so the point that you made, I think, is important that, you know, first of all, every investment strategy is different, and you need to know what your style is and how much risk you're willing to take on, what's your time horizon, and what is the goal you're working towards, right? But you made a point about getting help, you know, and I'd love to just kind of get you to clarify that, because if this stock thing, and I know we had the guys from Finance Twitter, JA, last night, and one of the points they were making, Simon was adamant, me not go tell you which stock to buy, right? Because he says every time he mentions something, he tweet it, somebody go buy it. And then the price move in the wrong direction. But Simon, you tell me if you go buy it. He said, yeah, but that stock is good for me. And what I want to do, it may not be good for you. But you're saying that if you don't really have the time or the expertise to be able to do that on your own, when you say get help, what do you mean? What's the alternative to that?
Yeah, thanks for that, Kerry. So, and I'm glad Simon actually mentioned that, right? So as investment professionals, I have a secret to tell you. We don't know whether or not the stock price
will go up. Wrong number calling? Sorry. Vibrate or silent on the cell phones, please.
So let me just repeat that again. We don't know whether or not the stock price is going to go up. If we did, I would mortgage my house, rent out everything I have, and just buy that one stock.
That's right.
We don't know. What we do know is that it should go up, right? It should, based on all the fundamentals and based on the model, it should. But when it goes up, it's a different thing. Is it today, tomorrow? Will the bank take my house before the stock price start go up? So that strategy of saying, okay, should tell me the stock to buy, it's a strategy that is not the most effective. So what we do as investment professionals, we spend all our days looking through the fundamentals of companies. That's what we do all day. So while you're listening to your favorite song, we're listening to combing through financials and looking at what's happening in the world, like CNN. That's it. And Bloomberg News. That's what we do. So we are spending the time and effort to do all of that. So in terms of the help, so there are different investment managers offering opportunities for you to invest in stocks. Unit trust, mutual funds. A mutual fund or a unit trust is a fund that somebody every day, it is their job to ensure that what is in the portfolio makes sense for them. But again, and it's a collective investment scheme. So with a small amount of money, you can get a little taste of NCB, Scotia, Panjam. You can get a taste of the entire market without mortgaging your house to invest in all of them outright. So that's the help I'm talking about. Sit down with an investment professional and say, okay, I want to do X. I want to retire. I want to buy that new house. I want to go on a vacation. Sit down and map out a plan and say, okay, this is what I want to do. The first thing we're going to ask you is, all right, so when you want it, how much money you have now, and what's your risk tolerance? After we get all of that, there's a plan or an opportunity that's specific to you. If you are a young person and this goal is 15 years from now, we're going to make money. So Warren Buffett always said that, right? His investment strategy is to actually take advantage of impatient money. What we mean, when everybody is selling, that's when he's looking to say, okay, is there an opportunity in this thing to buy it? Because the person who buys a stock and says, okay, I'm going to make money in 1 month or 2 months, they're going to look to sell it if it's not going where they want. So the patient money can sit down and wait till the price to come to him, and they buy it, and they hold it, and they wait until it go up. So that investment strategy, that outlook, is what will drive investment, in my mind, for 2020. A disciplined approach towards making money. It's not as easy as it was in 18, 17, and 16, because the dynamics is changing a little bit. So get help. Come in, talk to, whether anywhere. All financial houses are offering the same thing now. Go in, sit down, work out the plan.
Preferably JMMB.
Preferably JMMB. But the idea is that you need to sit down and you need to have a plan. You need to have a plan, because just saying to buy stocks, you can lose money now in stocks. You can lose money if you just bet on the foreign exchange. You can lose money if you're just going to buy bonds. So what can we put together that is specific to you, and it's totally different from the other?
Thank you. Oh, sorry. No, I'm not cutting you.
So I mentioned stocks and bonds, but I also should point out, when I mention about exposure to commodities, i.e. you want to buy oil or gold or steel, so that's what we call alternative assets. So it's not a bond, it's not a stock, it's not cash, so it's everything else. Yeah, and yes, you can buy, you can invest in steel, you can invest in gold. So, but for you to go out there and say, okay, I'm going to buy gold, that's an inefficient way of doing it. There are funds, there are structures set up, mutual funds set up where you can actually participate, or unit trust, participate as a collective. And that's why I'm saying, rather than you trying to find the opportunity every day, identify your plan, work out the strategy with an investment professional, and then we actually manage it on a day-to-day basis.
Yeah, that's a great point, because, and before we move on to Greg, just to add to that, Peter, that again, if it is you don't have the time or the expertise to be looking at the individual thing, I know me not know where to go buy oil or gold or anything like that. But these unit trust funds, folks, and essentially here, unit trust. Have you heard about a unit trust before, or a mutual fund? So essentially what it is basically a collection or group of investors. You take your money and buy units in a fund, right? So the whole of it come in here, we think of a partner. It doesn't work like a partner, but the essence of putting your money together. So all of we in this room put in some money. You put in $10, you put in $100, you put in $500. And we all put our money together. And Peter now takes all of our money and invests in various things, in buy like oil, in buy like gold. There are some unit trusts that are more based in stocks, where he uses it to buy stocks. So him watch when the stock must buy, when the stock must sell. There are other funds where you real estate, some that are more, that are less risky, that buy things like fixed deposits or so. And then there's, as you said, gold and all these things. And you just make Peter manage it. And you just get the growth, the change in that unit price that you would have bought it at. So when you put in your $10, if the growth is 20%, you're going to get 20% on your 10. The man who put in $100 going to get 20% on his 100, and the $500 man going to get that as well, once provided you went in at the same time. And why that is great, again, Peter, take away the headache. But also, some of the other traditional investments that we know about, the more money you get is the more money you had invested is the greater the return. Unit trust kind of just equalizes all of that, where you're getting the same return for whatever you had put in. Essentially, you're not, only the $1 million man. You're going to get the same percentage return provided, again, if you went in the same time as the other guy. But just to clarify that the unit trust is an awesome investment vehicle for people who don't have the time or the expertise to run that down. Greg?
Yes.
I had said before that, opportunities in local equities, I don't want to do a Simon on you, of course, but if you want to share that, but also what did you want to share?
Well, I think Peter said it a lot.
He absolutely did.
Probably, but Peter has a lot to share, and, I am fortunate to benefit from his knowledge, right? So where Peter deals with the client side, the proprietary side really operates on the same principle. When I say proprietary, remember I'm talking about how JMMB looks at how it's going to make money from
itself.
Investments. And local equities, I just want to spend a few moments to say, we've seen the market being in a bull run for at least the last 4 years, right? 2016 to now, we're averaging 33% per year. But it doesn't paint the entire picture, because last year, for instance, the market peaked out at about late August and has been down going into the end of the year. So for persons that...
When you say the market has been down...
Market is down. The main index is down about, or the combined index is down about 2%.
Really?
Right? So it doesn't just continue going up, right? Just to highlight that you can face a period where you're not going to be making brick on whatever they said these days, right? Whatever they said these days, right? So, as Peter said, looking forward, it's going to become more difficult to pick investments for portfolios, and it's based on what you can take as a risk, or your risk tolerance, right? What risk you can take. There's a quote by Ben Graham, and for those persons that don't know who Ben Graham is, he's actually Warren Buffett's teacher. He's the father of value investing. And he says, an investor should consistently act as an investor and not a speculator, right? So basically what he was saying is that whatever decisions you make should be based on facts and analysis, not because you want to speculate or somebody tell you, say, oh, this is the best thing since sliced bread, you know, you go and you buy it and expect to make money. Now, with that being said, equities, as Peter alluded to, has some juice, because if you look at it, Jamaica has been in a cycle of high interest rates in the past, and we're now in a cycle of low interest rates. And we're really we're just at the start to see how these low interest rates are going to benefit the economy going forward. So by that I mean, capital is now moving at a very fast pace in different mediums. So the stock market, how many companies last year raised capital through IPOs, APOs, right, rights issues? I think over $20 billion has been raised from the market in 2019. Going into 2020, we know of at least $17 billion to be taken from the market in these new issues. And there is money in the market. Every year, the government has maturities of bonds that were coming out of the debt exchange. This year, in October, $89 billion will be put in the market. The government is not looking to necessarily take all of that money back out. So where is it going to go? We believe that the stock market is going to be a medium for investment. And I can't tell you that all of the money is going to go there. There are other asset classes, as Peter described, that will also benefit. Corporate debt, for instance, is an asset class that persons are investing in.
Yeah, companies,
right?
Companies offering bonds.
And you're seeing it. You're seeing it in the IPO space. Trans Jamaica, which is, I think everybody here hear about Trans Jamaica IPO
coming up.
It's scheduled to be the largest IPO in the history of the market. They're looking to raise probably anywhere from 80 to 100 million US dollars, right?
Ooh.
That's significant. Now, capital is going to be attracted from this space because persons that have businesses are going to want to raise capital. Mature companies, established companies are going to want to raise capital. JMMB just had the largest issuance until Trans Jamaica, right? For it, or additional share offer, right? So that really leads me to my main point in terms of value, right? What are we looking at to give us the most value in 2020 and beyond? Now, I won't get into maybe the stock picking because everybody's portfolio is different, but what I would tell persons that want to build a portfolio or to have a solid equity portfolio is to just look at the companies. Take the time to look at the companies and what they're doing. I like companies that are diversifying geographically. So the companies that are not just solely dependent on the performance of one economy. For all the nice macro performance that Jamaica has had, finishing an IMF agreement and low interest rates, our growth rate is still lagging than where it really should be, right? We're growing at about 1.9% for 2018. We haven't gotten the 2019 number. So for companies that are looking to expand into faster growing economies like DomRep, right?
Yeah, Dominican Republic.
That's growing at like 6-7%. Trinidad, Guyana, which is scheduled to grow significantly. This provides you a nice risk diversification. So those companies now have diversified revenue streams, right? You're looking at companies that also have strong leadership, right? Leadership is very important. So it's not hard to really, when you think about it, stock picking, although you're going to be very selective in 2020, there's definitely a formula, I think, for success. The performance of the market over the last 4 years, as I said, it's averaging 33%. Of that, the main market companies have done an average maybe 30. The junior market is a little bit less at 18. So what does that tell you? Focus is really on the main market companies. Now, I'm not saying that the junior market doesn't present an opportunity. Certainly it does, because these are really our SMEs that are looking to grow. but it may take a little bit of time.
Longer time. Mm-hmm.
So for persons that want to go into the market now, I would say put the smart money on what you know is solid and what you know is consistent. Because as Peter said, World War III can happen anytime. And you'd want to find yourself invested in companies that can weather that storm, rather than some companies that may feel the brunt of a retrenchment cycle, or when the market pulls back more significantly.
Okay. I mean, I got a wrap-up signal before we go to Q&A, right? Yeah. But just to kind of break it down into some nice points for us to take away as we move to the questions is, so I'm hearing you say, first of all, you have to define what your goal is. What are you investing towards, right? Mm-hmm. That's the first thing. House, car, vacation, picnic education, your education, whatever it is. How long you want to invest for is also very important. What's your time horizon, right? How much risk you're willing to take on, right? And of course, the usual formula is the younger you are, you can take on a little more risk than if you're not so young. Right. But there's high risk, moderate risk, low risk. How much risk are you willing to take on? From there, what would be the next step? Peter, you said have the conversation with a licensed financial advisor to put together or propose the investment solutions that you need. You're also saying that, 2020 is not necessarily going to be the same sweet money-making dance like you saw 2018, maybe even 2019. It's going to be a little bit harder to make money this year, but you can still make money provided you get the guidance you need and be disciplined and patient about it. Right? Is there any final thought you want to add in 60 seconds, Peter, and then Greg, before we go to questions?
Just quickly. So the opportunity, so right now, the majority of you have probably just seen the local equities market as options. But I'm saying the globe is technically your option. As an investor, you can invest anywhere you want. But then investing everywhere you want is not as easy as investing in Jamaica. So the support, so with the right support and the right investment strategy, you can be getting exposure to Cayman, you can be getting exposure to Guyana because it's a good market, Trinidad, Dumrep. I'm looking at real estate investment in Dumrep. So clients that we manage, they're indirectly getting exposure to Dumrep, and they've never ever been to Dumrep, and they don't know how to say hello in Spanish, right? So. So that is the type of support that you want to make if you want to get your goals, align your goals and your objectives over a long period of time. There's still opportunities locally that if you want, you can dedicate the time and effort, fine. As a matter of fact, as an investment manager, I like when you have a lot of retail clients in the market. So get the support if you don't have the support, the time and energy. But the opportunities, you have to now think global rather than local, because the opportunities locally are, getting less and less and harder to find.
Right, and those global opportunities you're saying is not necessarily you to go and buy or find these instruments online and
correct.
Click, submit, or purchase. It's about going into these mutual funds, unit trust opportunities that are funds that are buying into these opportunities. Correct. And you right here in Jamaica can put your money in the fund, you're handling the investment, and we stand to benefit from the returns. It's so nice and easy. Greg, 60 seconds, what's your big takeaway in terms of next step as we walk out of this room as an investor?
Well, the glaring next step would be if you have not started, you need to start.
Start.
Right?
Yes.
And you need to have the discipline. So as Peter said, you may not have persons that have that experience or that knowledge, but seek it. If you're going to invest in the market, you might as well invest in yourself, because the money you put in yourself to the course is to learn this type of analysis. It will pay back for itself. There are a number of opportunities out there across the globe, right? We're in a year of somewhat uncertainty, right? But that doesn't mean or you shouldn't feel intimidated by it. There is still value to be had, and you won't have access to it unless you start.
And I underscore that point. If I can give a personal testimonial before we go to questions, because we have our roving microphone folks getting in place, is that when you don't start, you miss out on opportunities that you don't even realize, and sometimes you lick yourself in the head and say, Lord, if I did just ever. I mean, I remember when I first bought NCB stock about 15 plus years ago, and I bought it anywhere between $9 or $15 for NCB.
And you're sitting here with us?
And I'm sitting here with you, working at JMMB. Why? Because I started, yes, I started later than I perhaps should have, but I also, I didn't buy enough at the time, and I did not exercise that disciplined approach because I bought it back then and never bought it again until mostly last year, early or late the year before when I bought it for $99. You understand? Yeah, no, cry for me now, man. But, you know, it just goes to show you, you know, just start and be disciplined about it. It may seem daunting, and, you know, you're here, JMMB's here. If you don't get a chance to speak to anybody, we'll be sending out emails, and you can fill out information if you want to be contacted for a conversation. But it's start and be disciplined. You may not see,
I need to add something to that.
Yes, add something, Greg.
It's not just about starting, it's about being patient.
Patient.
I can't tell you the stories I've seen where persons just get frustrated and exit a trade, and right after the exit, that is when it pays off. Remember, we're in this thing for the long haul. You know, as Peter said, you know, you have to be patient. It takes time for these investments to really mature for you. Right. So don't enter it thinking, boy, if it don't double by next week, I'm out. Sometimes we invest thinking, what you're going to do long term.
Exactly. And I learned this trick too. Unrealized gains versus realized gains.
Realized gains.
So people buy into the stock and the stock price move, man. Yeah, man, I make 50%, 75% of my money. That's unrealized. Try sell it now. Sometimes you can't realize it. So, you know, it's about, again, that patience, that focus, that discipline. Thanks, guys. So, questions. Don't all bum rush the mic at once. We have our roving microphone. Here's a pen. Right here. Camila is right here with the mic. Question. Thank you.
Good afternoon.
Hi, welcome back.
Hi, Kerry. I'm Tamara McHale. All right. So, wonderful presentation, by the way, both gentlemen and Kerry. I wanted to find out, in terms of cryptocurrency, is that something that is viable for investment, and does JMMB offer that? A friend of mine was actually, you know, somebody online reached out to her and she nearly got scammed. Luckily, based on advice, she backed away from it. So I wanted to find out if that is an option. And also, as you mentioned, in terms of starting, because my coworkers, they are big in terms of investing in the stock market. I started just like last year. But they are investing like $500,000. I'm investing just like $50,000. so then I sometimes I'm like, should I just wait until I save up some more money, or, you know, if it really makes sense?
Fabulous question. So, so that's two questions. So the cryptocurrency one, you want to deal with that, Greg?
You want to?
No, if you want to touch that one.
So cryptocurrency, right?
What is cryptocurrency in English?
It's a digital asset.
So it's the next speculative investment, right? A digital asset where half of the people buying it don't know what they're buying, right? So there's buy it because they've seen it gone up, right? The whole concept of cryptocurrency, there's a technology behind cryptocurrency and Bitcoin and all of that, which I think, will change how we do business in the future. The actual cryptocurrency as an investment, though, that's the one that, as I say, I've been doing this for a while. I have, you know, training in it, and I would not buy cryptocurrency in its form now. Now, there may be companies that are doing things related to cryptocurrency that you can get exposure to. But to say, okay, I'm going to buy cryptocurrency as an asset in my portfolio, you're really saying, okay, I'm going to put some money on number 9, and if it pay off, you know, my bingo. So the fundamentals...
AKA don't do it.
The fundamentals behind cryptocurrency in terms of understanding what make it move, I don't know it. And my job is that if I don't understand it and know what caused it to move up or down, investing it is called gambling, and that I can't do with clients' money.
No,
So
not recommended.
in terms of the whole,
I think that cryptocurrency has definitely risen in prominence across the globe, but so far it's not, as far as I know, legal in Jamaica. But you do have persons that speculate on it. I know that the stock exchange has also mentioned that they want to introduce the trading of crypto assets. So it's something you're gonna hear more about. But I think what we're saying is it is a very risky, unregulated type of investment. So if you do choose to engage in it, it's gonna come with some levels of volatility that you may or may not be able to stomach. And as it is now, there's really not a whole lot of expertise surrounding it. So I'd be very careful. I mean, having it as an asset, you're having your asset in a digital wallet. A digital wallet can be hacked. So you can lose your investment and you don't even know what happened, right? And that's oversimplifying it, but it's something at this point I think, the market is not necessarily, or our market, I should say, is just kind of being introduced to it, and maybe down the road we'll see where it goes, but for now, it's not something.
Kind of stay clear. And I think, next question,
Well,
because I know she had a second question, which I think I'll just address because I think it spoke to the amount of money that you had. And again, in addition to saying just start, it no matter with how much. If you're talking about, if you're interested in investing in the stock market, of course, there are several brokers that exist for you to be able to do that through. But every broker, as I said it last night, with due respect to each brokerage house, we each have our different requirements needed to open an account. And unfortunately, some brokers, depending on the minimum starting balance, or some brokers you will call, oh, you need $250,000 to start, or some $500,000.
We will open your account for you.
JMMB will open your account for you. I mean, 10,000 is a nice round number, but the point is start with whatever. It doesn't matter. As I said, I bought NCB with $12,000 when they were selling for anywhere between 9 and 12. Where is NCB now? What was the last price?
190.
100 and what? 198. Look at that. That was, from then to now. I mean, just start.
I just want to just share something with the question.
Next question. Let me just get the next question and just eyeball that person right over here. Yes, sir.
I had a client that he's retired now, and his pension is really, dividends that he receives from investments in financial sector companies. But that gentleman said, listen, I started buying when I was really young, and I just continued to buy. Continued. So you don't need to have a large lump sum. I can tell you, he's being fully financed in retirement just on his dividends alone. So the importance is discipline, consistency. It's not where you start, it's where you finish.
Where you finish.
So just start.
And buy that mickle. NCB $9, NCB $12, NCB $198. We need some counseling. Question over here.
Okay, hi, good evening. My name is Charmaine. Thanks, gentlemen, for the very insightful information. So I had an experience yesterday. So I want a little bit more info in terms of US dollar investment. I went and opened a US account yesterday. I have a dividend account, US, I wanted to go. I was actually shocked that it's a basic savings account, but the interest is 0.00001. And 0.00. So essentially it's zero.
Right.
Not
And
really.
Then there's a fee that has to be deducted every month. So until one is able to amass enough US dollars to put on one of these US bond accounts, etc., what exactly is the option? Because the bank is gonna be keeping my money, and they will take it and be investing and doing whatever it is to do, because as Mr. Lindo said, the bank needs to make money too. Fine, but then I'm not really getting a return. So for persons who want to, until they build up enough, what is that that in between, that will make sense if I now want to say, every month from my salary, I want to top up, but I also don't want to think that it's going to just be earning 0.001.
Great question. Thank you. Peter?
All right, so remember when I pointed out that globally interest rates are negative, as in interest rates are low globally. So when you give US dollar on a savings account, the bank is going to look at it and say, okay, what can I do with this savings account? If I take that money and amass it with everybody and I'm going to lend it to somebody on a loan, the person, 4 or 5% they're going to charge the person for the loan. After they've deducted fees and all that expenses associated with administrating, the profitability of it, if they give you 2%, there's no profit left in that US loan. So investing, so there's a difference between investing and saving. And as the first part of the conversation that we're going to get out, you may be saying, okay, I want to invest. And if you want to invest, there are options that don't have that 0.02% because it's not putting down your money and say, okay, I know for a fact that 1 year from now, I'm going to get an interest rate. What you're saying is that here is my plan. I can put down 100, 200, 300 US dollars a month, whatever that figure is. I want to get to X. It is our job then to sit down and say, okay, what's the time horizon, your risk tolerance, and then we invest it in not a bank account because you're investing in a bank account, you're going to get almost zero or negative because that's just how it is now. However, bank accounts may make sense for some people. The guy who won't pay the deposit on the house next week or next month, it makes no sense. He invests it. He puts it in something that the value can't change until he's ready for it. However, if you have a longer-term plan, a medium-term plan, you can start with a small amount. The investment amount, so each month, once we understand, so okay, X amount of money is coming in, that money coming in will then be allocated to different things. So you don't have to buy a bond. The majority of our smaller clients, because JMMB, sorry for plugging JMMB, but yeah,
it's all good.
Even though I'm in the NCB colors, right? So
paying the bills.
The beauty about it is that we pushing this mantra of start now, start early. We're saying the minimum to start a goal planning is low. As in, to open an account, you can have as low as $100, right? US, we're talking about. So we are focused on the long haul. So yes, there's a process, there's a fee associated with, there's expenses associated with dealing with a smaller client. But our vision is long term. We know that if you come in and you're putting $100 down for the next 3 years, it adds up. And that money now, we allocate it on your behalf. So if your goal is your child's education because you want to send your child to Harvard and you want to save that US dollar investment, we will then take that money and invest it in things that the value of it will go up and down, but over the next 10 years, the value of it will be higher because we are patient. Your money is patient money because you're not looking at what it's the value next week. You're looking at the value 10 years from now, and if you just stay focused, we will get there. So the minimum to start is
about $100, $200. So so the thing is, as you said, just to underscore the point, that if you want to open a US dollar savings or fixed deposit account with a bank, then that's one thing because you're getting a guaranteed rate, 0.00 whatever. I don't know. But that's okay because that's what you want for that purpose. But if you're willing to invest for the long haul, there are these US dollar-based unit trust mutual funds, the JMMB wealth builders, and other portfolio account where we will take that, pool it, and then over time you will see much better than 0.00 something. Thank you. Is there another question? Yes.
All right, Carrie-Ann, Greg, and Peter, good afternoon. Mike, I have two questions. One is to piggyback on the question from the young lady earlier. She asked about cryptocurrency. I'm asking about forex trading because I've been noticing a rise in interest in that in Jamaica, and persons have been coming to me pitching this whole forex trading thing. Julia, you need to get into this. And I don't quite understand it, so I want to have your views on it.
Yes.
My second question is, I think Greg earlier mentioned us getting educated on investments, and you alluded to investments overseas. I have been told many times that it's hard as a Jamaican to invest in international, whatever internationally. So just stay away from it and just stick to the stock market. Is that your advice? And if not, how can education become simpler for the layman so we can understand that what we are getting into?
Two great questions. I think FX is a popular one. Yeah, man.
Channel last. So, all right, as far as I am aware, Forex trading has become prevalent in Jamaica again. The last time there was a gentleman by the name of David Smith.
Who was old enough to remember that.
So, but to simply answer, I mean, Forex trading in itself is legitimate, right? It is a market. It's the most liquid market in the world. It's traded by many persons across the globe. Now, as far as I'm aware, how it's being marketed can be a bit misleading. The Forex market is extremely volatile. It's extremely liquid, as I just mentioned, and the risk of loss is great because you're trading on leverage. So it's something that if you're going to take it on, you have to have a certain risk tolerance, a capacity to lose, and you need to be, I would say, very educated in how that market works. Now, some of the Forex programs I'm hearing about, it's kind of tricky because they want you to buy products, basically to either assist you in trading or to trade for you. I mean, I don't have all the details. And from the purchase of those products, the person that sells it to you earns a commission. So it's like a multi-level marketing. I'm not going to say it's a scam, but I'm just saying that you have to know. Yeah, you have to know what you're doing, right? Because if I come to you and I say, hey, buy this product and earn money in Forex, and I'm getting paid for that and not really the trading, then, But of all the we've known quite a few persons that have tried it, and these are persons that are knowledgeable. There's a very short time span for a lot of them. They may make money at some point, and then it peters out. So it's risky. The market itself is legitimate, but it is big people business.
Yeah, I'm gonna add that and just close off the response by saying, there is a wonderful gentleman by the name of Randy T. Rowe, right? And Randy has this podcast called Earnings Season, and there's a particular episode that he did on the FX market with JMMB's own head of Treasury and Trading, Kwame Brooks. And he went into some awesome details about that. I'd encourage you to look up that podcast. It's available on all platforms. Earnings Season with Randy Rowe. And Kwame spoke about just that. And just some of the feedback he gave was really interesting because, there are a number of people who are actually making money, less than 2% making any kind of money at all. And further, there's more money made in selling these courses and platforms than actually doing the trading. He said, having signed up for a course once, he went to the guy and he looked on the teacher and said, you ever trade yet? No. He said, well, if you're making more money by teaching me how to trade and I'm not making more money doing the actual trading, what does that say? But it was very interesting, and I'd encourage you to listen to that. Great response. The next question was, because you had asked about FX. And then
investing in overseas education. Well, so the thing with education, there are a number of sources out there where you can get good, a solid foundation. But it really takes an interest, right? It takes time. I would say start with the accredited programs. Like many persons may not know that the stock exchange offers online training, right?
JSC
That's a good place. That's a good place to start. When I just came into the industry, it was classroom based, so you'd have to give your time. Now you can do it from your home. So I do think there are some avenues that make it easier. Unfortunately, I mean, your broker, or I should say fortunately and unfortunately, your broker has the information, but for you to sit with your broker sometimes can be difficult. So a lot of it is going to be self-learning, right? And it can be done. When I came into the industry, I had a marketing background.
Woohoo!
Right? Marketing, right? And a marketing background. And, I started in trading and I had a desire. So I kind of sought a lot of different sources to learn. And there's a multitude of sources online. There's Udemy, there's Coursera that can give you the foundational principles. But it really takes you having to reach for it yourself. And some of the local institutions, I believe, offer training. And it's out there for you. Yeah. It really is out there for you. You don't have to do a degree in it. You don't have to do a master's or a PhD. It's really just to learn the foundational principles and build from there. A lot of it is learning from experience too, but in trading that can be expensive.
Correct. And I mean, just to add too, that, JMMB, we try and play our part with financial education as well. If you check out jm.jmmb.com, and you look on the primary navigation bar at the top, we have a life goals section that breaks down a lot. It has lots of blog articles and so on about everything from buying a home to, investing for your education. And we also have the Markets Insights page, which offers research on the companies that are on the stock market and the countries that are offering bonds and things like that. So the information is there, but as you said, it really just takes you to be able to seek it out and learn. And again, stick close to your financial advisor. There's a question here. I think we just have time for one more question. Yes, ma'am.
Good afternoon.
Hi.
Hi. My question is, I think it was Peter that mentioned buying stocks as a company. Now, I just started a small company and my money just kind of there. The small amount is sitting in the bank. Now, with the next IPO coming, I'd like to be educated on how to use that money and invest and somehow grow. So I have purchased stocks as an individual, but I would want to know if that's the same requirement if I'm buying as a company.
Oh, so your company is a legal entity.
Right.
Once it's not a sole trader, but your company has a limited liability. It is an entity that the law recognizes. So it has a TRN and all the necessary stuff, so it can also invest. And you can invest through the company or the company's money. But then, again, remember that you have a company and your passion, what you're focusing on is making that company the best. Excess cash that is not reinvested in the company to make it even better, there is an investment portfolio that you can build for that company. But I love to caution people that it's not about I'm just flipping and making money, because for some time you may not make money. So this money can be next month's payroll. It has to be money that we say, okay, we have excess cash flow coming in. We know what this money, I can afford for it to stay invested for X period of time. Yes, I'm going to put it in, but if it don't work out yet, then we can wait. And the point I'm trying to make is that this year, I believe that long-term money go take advantage of short-term money. As people not seeing the pop that they want, they may just be selling, and we'll be waiting patiently, just ready to buy it, the good stuff when you're ready to throw it away. So I'm just saying patience is going to be critical this year from an investment perspective, and focus on your goal. What you're passionate about. If it's not investing, if investing is not your passion, and building widgets is your passion, focus on building widgets and hire people to do the other. If investment is your passion, get educated, spend the time, and no amount of book learning and will help to kind of guide over that first trade that you lose money on. When you see it, you buy it at 10 and it's at 5 or $1 and you have to sell it at 1, and you feel the belly hurt you. No training can help with that. So it's experience, but you have to be passionate about your craft. Whatever you're doing, you have to be passionate about it, or, it's not going to work out.
Okay, I was told I need to take one last question over here, and then we wrap, because Rochelle is ready.
Hi, my name is Rosita Peter, and my question is, I know we're not really so sure about the whole World War III thing.
The whole what?
World War III.
Oh,
World War, okay.
But
Yeah,
in the
really want to say it too loud.
eventuality that we do go there, now I'm not asking you to stock pick, But what industries would you recommend as solid industries for persons to invest in, other than the ordinary oil and gold?
So in case there is a war,
In case there is a war.
God forbid it, we rebuke it in the name of Jesus.
Amen.
Well,
In case there is, you're asking
What
what
are the
industries
stable
would
industries?
at that time present the greatest opportunities?
Yes.
Rebuking it in the name of Jesus. Yes, Greg.
that's a hard question. I mean,
Wait, you mean locally or internationally?
you talking locally or
Locally or
internationally?
internationally?
Do
Anyone?
us both.
Both?
Anywhere. She's a global citizen.
Well, if there's a war, the first stock you want to buy is defense stocks, right? Because you're going to need some plane and some ship and some
Defense
tanks, right?
stocks, okay. Plane
That's on
and
the overseas market. We don't have that here. But how you look at it is, all right, if there's a war in the Middle East specifically, you're going to have oil going up.
Oil
So who are the oil
prices going up.
producers, right? Or what are the major oil producing territories? They're going to benefit because the oil price will move and they will earn more income. So it may be from an economic standpoint, those territories will improve. So like Trinidad will probably get an immediate boost. Which companies are exposed to Trinidad, right? They may benefit.
Yeah.
JMMB.
Right? You might have, other industries that benefit from a war, like services, right? Financial services, because you need people to send money or whatever.
Yeah.
Who is engaged in remittances, right?
So locally, it as I say, kind of difficult to think about it locally because we don't directly feel it. As in, we get indirect exposure through what happens globally. So if there's a war, in terms of, okay, there's war in the Middle East. So all of that part of the world, will tourists stop going to that part of the world and more of the numbers come here. If more of the numbers come here, then you can look at who supplies tourism type products. So CPJ, for argument's sake, is big in that space. So the point I'm trying to make is that there's no like easy, quick fix. So for us, when I'm planning a strategy, if there's a war and no war, I'm not just looking locally, I'm looking globally. And again, the vehicles through which we do it, we create products and structures to actually give us the exposure that is appropriate at that particular time. But just to answer your question, locally, we would be looking for the people who would benefit when there is turmoil elsewhere. So we'd look back and say, okay, the last Iraqi war, what happened? How different will this one be? And who benefited? Who will be buying more and doing? Right. So it takes a lot of work to actually come up with who will benefit. And because it all depends on how long it lasts and where it's going, they're attacking. So it's a complex thing. And
so like a practical example is if the Gulf is in turmoil, you can't probably ship there. So do you ship through the Caribbean? If they do, Kingston Wharves, maybe.
Yeah, logistics.
That's possible. But it's a very big what if, So you can always say this could happen, but the reality of it may not.
Great. Thank you very much. So, guys, thank you very, very much. Can we have a round of applause for Peter and Greg? I mean, you guys know your stuff. You're nice guys. When I do have no brother, we're single. I mean, no, I'm kidding. Sure. Anyway, standing up for my single sisters. My department knows this very well. I'll just tease it. So, guys, thank you so much for your time. Thank you so much for your insight and your willingness to participate today and be in these hot seats. And thank you also for working so hard on behalf of our clients. We really appreciate your commitment to what you do. And yes, thank you. And we know that 2020 may not necessarily bring the same guarantees or the same occurrences as what we've seen, but we're confident that you guys are on the job and we're going to do a thing and we're going to make the best of it for 2020 and beyond.
Always.
So enjoy the rest of the event. One more time for Peter and Greg. All right. Thanks, guys.